What's up, traders? So today I'm going to talk about Palantir and why you should not buy the stock right now, but what option strategy you should use in order to make money off of the stock. For those of you new to the channel, my name is Rashad. I am a full-time options trader, bringing in multiple six figures a year trading options, and I use the money I make from options to pay for my entire lifestyle. But enough about me, let's get down to business. Palantir is an amazing company. It builds and deploys software platforms for the intelligence community, principally in the United States. Now, mostly they build software for the US government and for large US companies to use. And they have a tremendous amount of US contracts, and the government usually pays their bills. And since Palantir's revenue has been growing so rapidly, their stock price has been going up with it. So if we look here, it is currently at a market cap of 95 billion, and they brought in 2.2 billion over the last year in revenue and 209 million in net income. And if we look over here at their income statement, you can see how their revenue has been growing nicely year after year. So in 2019, 742 million, 2020, 1 billion, 2021, 1.5 billion, 2022, 1.9 billion, and then 2023, 2.2 billion. So their revenue and income has been going up steadily, which is a really, really good thing. And if we look at their chart here, you can see how it has been going up as well. So literally just 6 months ago, it was a $20 stock here, and now it is $42. So not only has their income and revenue been growing rapidly, but the hype around what their future numbers could be has been growing as well. So I want to point out a few things. One is it's at an all-time high. And secondly, if we go back to the fundamentals, their price to earnings ratio is currently at 323. In other words, they are wildly overpriced. Now, I am an investor and a trader. Now, I'll speak on investing. I would never touch a stock that has a PE of 323. I ran a fundamental analysis on this company, and I probably wouldn't buy anywhere over the price of $15, which it is far from. However, it was just nearly $15 just earlier this year. And now you may go, oh, Rashad is going to keep going up. And well, it very well may for the near future. And just like Warren Buffett says, in the near term, stocks are a voting machine. In the long term, they're a weighing machine. Over the long periods of time, stocks will trade at what the company is actually worth. So for me as a fundamental investor, I'm not touching the stock. However, as a trader, now that's a different thing. I'm going to show you how I would sell puts on this company in order to, one, generate income and to possibly buy the stock at a cheaper price. Now, if you're new to options, when you sell a put, you are agreeing to buy a stock at a cheaper price by a certain date. And for agreeing to do that, you get paid money up front. And here's a quick example of that. So let's say that Apple's currently trading at $175 and you're okay with buying it at a cheaper price. Then what you could do is sell a put for, let's say, around $165 for a contract that is 30 days long. And for doing so, you will receive $200 in premium. Now, as long as Apple's stock price stays above your $165 strike, you go about your day with your $200 and you can continue to sell puts over and over and over again. However, if Apple's stock price were to drop below your $165 strike, then you agree to buy 100 shares of that company at the $165 price. But the good news is you still keep the $200 that you received. So let me show you how I would sell puts on Palantir to, one, get it at a cheaper price, but also the things that I look at prior to selling any puts. But wait. What if you can make money while on vacation, while spending time with your family without constantly worrying about bills? What if you can make the money for your entire vacation while on vacation? I personally trade options full-time and generate multiple six figures per year, enough to comfortably provide for my wife and 6 kids, and our multiple vacations per year. In Trade to Freedom, I'll show you how to create passive income streams that keep paying even when you're not working. You'll get my exact trades as soon as I answer them. Imagine being able to take that trip you've always been dreaming of, knowing that your money is still working for you. The link is in the description below. I'll see you in the community. All right, so here we are, and we're now looking at the analyst price targets. So we can see down here that analysts do have it currently as a hold, and this is based off 14 different analysts for Palantir. And the main reason they have it as a hold is because of how much Palantir's stock price has shot up over the last several months. But if we come up here, the high target is $50, which of course right now it's $42. So some analysts do still see some upside in it. But the mean target is 27. So collectively as a group, these 14 analysts do think that Palantir is vastly overpriced. So when I want to sell a put, one of the first things that I look at are the Bollinger Bands. So if we come over here, these little black lines are the Bollinger Bands. So essentially this middle line here is the 20-day moving average. And the top line is a 2 standard deviations above the moving average, and the bottom line is 2 standard deviations below the moving average. And to sum up Bollinger Bands in one sentence, and Bollinger Bands simply aim to show you the range that they expect the stock to trade in. And studies have shown that about 95% of the time, stocks typically stay within the Bollinger Band area. So as you can see over here, when it does come out, it pops right back in. So it stayed in, came out, popped in, came out, stayed in, and we had this one little outlier here, but then it dropped back into the Bollinger Band again. Okay, so even the few times that it does pop out of the Bollinger Band, it doesn't stay there for very long. And if we look over here, the Bollinger Band has it going no less than 37.30. So that is one thing that I take note of. Now, the second thing that I like to look at is what is the expected move? And we can see here, the expected move, which is also referred to as implied move, reflects the price range that a security is expected to move from the current price. The expected move is calculated based on 85% of the value of the at-the-money long straddle. The range as predicted by the expected move can be used to target high and low prices. All right, so I'll scroll down to here. Now, typically when I sell puts, I'm usually always within a range of 45 days. And because Palantir is currently at all-time highs and is vastly overpriced, I'll probably want to go as close to 45 days as possible. So we'll come over here. So it looks like this November 29th would be the closest to 45 days. It's 41 days from now, but it currently has a low price of $36.70. Now, if we remember, the Bollinger Band said $37, so they're pretty much right on par. And so now that I know this information, now let's head over to the options chain and select our strike prices and see how much we can get paid for opening this trade. So now I'm over at the options chain and we can see I selected the same date, 41 days out from now. But I'll scroll down to the puts. And now the very last thing that I look at is the delta. So delta is the probability that the event occurs. So if a strike has a delta of 0.25 per se, then that is saying that there is a 25% chance that that stock will drop to that strike price by that expiration date. Or in other words, you would have a 75% probability of profit. And when selecting deltas for selling puts, I always go somewhere between 0.10 and 0.20. So if we come over here to the delta, if I scroll down, the highest I would go is 0.20, and it looks like the strike of $37 exactly is 0.20 delta. And if I were to sell this put right now, I would receive $123 right here, right now. Now, if you're a little bit more bullish on Palantir and you think that it's going to continue to rise, you can go even more aggressive. Come over to maybe, let's say, the 40 strike, which has a delta of 0.32, and you would get paid $212 for opening the puts right now. And that's per contract. And selling puts is an amazing way to continuously generate income over and over again on a company that you think is good and is going to continue to rise. But that is it for this video. If you found this information useful, please consider joining us in the Trade to Freedom community. It's a community that has the exact same goals as you to generate consistent, reliable income to supplement their 9-to-5 or to possibly replace it. And on top of that, you see all of my trades in real time. But that's it for this video. I'll see you guys at the next one. Peace.